you're allowed to buy gold, and that gold has been the best performing major asset of this century so far. The past 25 years, gold has
Mhm.
outperformed the S&P 500. So you're going to want some gold. So let's say you put 5% of your 401k in gold and silver. That doesn't sound like much in the scheme of things, but it's a massive inflow of capital into precious metals. Gold is not that big and silver is
Yeah.
minuscule. And I think a lot of people, if they listen to podcasts like this one, are going to favor silver because silver is way cheap compared to gold. And so, you get a $500 billion flowing into silver and you've got $100 silver right there.
John Rubino is a financial analyst and author known for his work on economic trends and precious metals. He points out that gold has quietly outperformed the S&P 500 over the past 25 years, making it the century's top asset. He suggests that if just 5% of 401k funds were allocated to gold and silver, it could flood these small markets, especially silver, which remains cheap and overlooked. In his view, even a modest shift in retirement investments could send silver soaring to $100. Silver is racing higher, hitting $39.50 an ounce after surging 9.4% in just 30 days. With silver already up over 36% this year alone, the question on every investor's mind is, how much higher can it go? Citi recently raised their silver price forecast to $43 by year-end, but is that too conservative? Inventories are vanishing, markets are tightening, and several inflation-adjusted models now point toward a potential silver price north of $100. John Rubino believes we're in the early stages of a major precious metals bull market. With political pressure for 0% interest rates and rising access to gold, silver, and crypto in retirement accounts, he sees growing investor interest. Rubino suggests this could lead to massive inflows into metals, something he has long expected. Silver, both a precious and industrial metal, is up 36% this year, outperforming gold's 31% growth and coming close to the key $40 per ounce mark. Silver's supply-demand fundamentals also remain favorable as the market is expected to remain in a deficit for the fifth straight year. Silver's recent rally has improved its ratio with gold to the strongest level in 7 months. It currently takes 87 ounces of silver to buy an ounce of gold, compared to 105 ounces in April. Before we get started, make sure to like and share this video, subscribe to our channel, and hit the bell icon so you never miss any of our updates.
Trump is a real estate guy, and you live and die on interest rates if you're in real estate. So to him, low interest rates are the only completely good thing in the world, probably. No bad side effects to it at all in his
No
experience.
malinvestment, right?
Yeah, nothing like that. If you can borrow money for 0%, you can make money in real estate. But yeah, okay. Here's the way this might play out is that, yeah, he gets his way with the Fed one way or another. They start cutting interest rates pretty aggressively at the short end of the yield curve. So the Fed funds rate goes down to zero again. And then long-term rates is where there's the question, because will the bond markets accept that? In other words, will long-term interest rates fall along with short-term interest rates, or will the bond traders rebel and start pushing up long-term interest rates? If they do that, then the federal government has to step in with yield curve control and start forcing down long interest rates too. And to do that, they have to basically create a tsunami of dollars with which to buy those 10 and 20 and 30-year treasuries. And then that shifts the pressure over to the currency. So in other words, you get inflation if you try to push long rates down really dramatically. And that's the dollar falling in value. And there's our
Insane.
end game. And it could happen within the next few years where the dollar starts falling in a kind of an uncontrollable way. And there's your crack up boom, right? That's
Yeah,
the end
that's
of
it.
this process
Totally.
where people start shifting their dollars into real assets. They start buying gold and silver and farmland and everything. The price of those things go through the roof and you get hyperinflation in that sector. And then, the dollar is basically toast and we have to do the monetary reset. So we could be
It's
living through
inevitable.
monetary history, right? Yeah. They have just decided, the federal government, to allow 401k plans to invest in alternative assets. Because right now, most 401k plans are in stocks, bonds, and cash. and mutual funds that hold those things. But now they're going to be allowed to buy private equity and hedge funds and cryptos and gold and silver, which is a really huge deal for gold bugs because there's multiple trillions of dollars in 401k plans. And,
Yeah.
if you've got a 401k plan that has mostly stocks and bonds in it, and then you find out that you're allowed to buy gold and that gold has been the best performing major asset of this century so far, the past 25 years, gold has outperformed the S&P 500. So you're going to want some gold. So let's say you put 5% of your 401k in gold and silver. That doesn't sound like much in the scheme of things, but it's a massive inflow of capital into precious metals. Gold is not that big and silver is minuscule. Yeah. Another way of looking at that from the precious metals point of view is that right now, gold accounts for less than 1% of investable capital. So if 401ks start saying, okay, I'll throw 5% in gold or something like that, since it's the best performing asset of the century, that quintuples the amount of money that the average 401k has invested in gold and silver. So that's those numbers actually probably can't happen because there would be no gold and silver left if 401ks tried to go 5% into precious metals. So
don't you love it?
Titanium, yeah. So we're at we're in the early stage of what is looking like a spectacular precious metals market because you got the president demanding 0% interest rates, people with 401ks suddenly being able to buy gold and silver and cryptos and things like that at a time when those are the best performing assets, when everybody's looking at them and looking how much they've gone up, which will encourage regular people to buy more now, whether it's at the peak of the market or not. That's an awful lot of money flowing into the stuff that you and I have been pushing for all these years. So it could be, that we turn out to be not only right, but right in a spectacularly unpredictable way. The stuff that who would expect the president to be firing the chairman of the Fed unless he gets 0% interest, or 401ks to be able to turn into hedge funds and buy all these alternative investments. That wasn't part of the plan, but it's a very welcome part of the new world for precious metals. Token company, what do they call it? I'm sorry, I should really have that at my fingertips, but the kinds of coins, stable coins. Okay, Tether is the big stable coin.
That's company. What everything gets traded into Bitcoin in eventually.
Yeah. But in the meantime, it's you buy. For instance, Tether has bought a bunch of gold, put it in a vault, and they've issued tokens, which are stable coins against it. Yeah, and so that's good for precious metals there. But then Tether also went in and bought a large, almost controlling stake in an emerging royalty company. And I had somebody explain the point of that to me. And one of the points is that similar business model. A stablecoin company, for instance, has massive revenue per employee, and so does a royalty company. And if they're going to start coming out with gold stablecoins, then they want access to physical gold. And so they're looking into the mining industry and the royalties and everything. And that's, there's way more money in cryptos that's available to flow into the royalty companies than is currently the case. So this could be another big deal for a segment of precious metals. If crypto companies decide that that's an interesting diversification, then look out for the junior royalty companies.
John Rubino highlights a striking fact. Gold makes up less than 1% of global investable capital. He suggests that if retirement plans like 401ks started allocating even just 5% into gold, acknowledging it as one of the century's top-performing assets, it could multiply overall investment in precious metals several times over. That shift alone could send a powerful signal to the broader market. The real appeal of a gold 401k lies in its potential for long-term returns. While it won't always beat stocks or bonds, gold tends to shine during economic downturns or inflationary periods, times when traditional assets struggle. For anyone building retirement savings, that kind of hedge can make a meaningful difference. Rubino also connects economic trends to politics. He argues that left-wing populist policies often fall flat in practice, especially in states with high taxes and overregulation. On the other hand, states like Texas and Florida with more conservative, populist leadership have seen growth, with more people choosing to move there. Even the Texas GOP sees the stakes. After surprise losses in 2018, they shifted focus in 2021 to protect existing districts rather than expand, showing how political decisions shape economic landscapes. Let's get back to the interview.
And I think a lot of people, if they listen to podcasts like this one, are going to favor silver because silver is way cheap compared to gold. And so, you get a $500 billion flowing into silver, and you've got $100 silver right there. And that's totally conceivable in the scheme of things now. So that's something that probably people aren't paying too much attention to, but is actually a very big deal for precious metals and for Bitcoin and for real estate. If you can all of a sudden, if you have a 401k and you're a hedge fund, a lot of wild things can happen. Well, now, it's really important to put this in context. But yeah, some very left-wing guys are winning some elections, but they're running, at least Mondami in New York, ran basically a populist campaign where his thing was affordability, and populism. Obviously, that's what Trump did. Trump ran on a platform of, hey, you're being screwed over by a handful of rich people. I'll get it back for you. Put me in office. I will get what was stolen from you and give it back to you. The guy in New York did the same thing. People who don't have your best interest at heart are running up rents, and they're making food more expensive, and Medicare or healthcare and everything.
Big conspiracy.
I will lower the price of all those things for you. And so that's left-wing populism. That's Bernie Sanders populism. And Donald Trump's right-wing populism is, I will get the factories back here so you get middle-class money working on an assembly line or something like that. But they both target the same people, the people who feel like they've been screwed over by the establishment.
And they have been screwed over.
Yeah. Well, yeah. See, that it has the advantage of being true. Populism does now.
That always helps.
See, no, I think the difference is, though, that the left-wing policy set fails miserably, and the right-wing policy set, which is reindustrialization and closed borders, has a chance of being successful. So, and you see that in states, right? All the states that are run according to left-wing populism are hellholes, and the states that are run more or less from the right in a kind of a populist way, that's where everybody's moving. We're all going to Texas and Florida because it's run according to right-wing, more or less populist ideals. So, the thing in New York will play itself out. I mean, if Mondami gets elected and he actually tries to take $1 billion away from the local rich people and spend it on, state-run grocery stores and stuff like that, that'll fail. Just because it always fails for obvious reasons. You chase away all the capital and there's nothing left to redistribute. And so we'll see. I got to say, though, Mondami he's a smooth guy. He's
snake oil salesman.
Way Obama-like, because, you criticize him and he comes back, instead of with hateful rhetoric or, picking a fight, he calmly explains why you're wrong and why his way is better. And he does it very well in complete paragraphs and everything. So he's a politically very talented guy. That won't save him if he gets into office and actually does all the stuff he says he's going to do. But, at least it's fun to watch somebody that is that articulate and that smooth.
Gold and silver are no longer just traditional safe haven assets. They're becoming strategic choices in a world full of uncertainty. As investors, including 401k plans, begin to recognize gold's steady performance over time, its presence in retirement portfolios is likely to grow. Meanwhile, silver stands out for its affordability and potential to surge when market dynamics shift in its favor. This isn't just about prices or returns. It's about people seeking stability in both their finances and their future. Gold and silver are taking on new meaning, symbolizing resilience and a hedge against growing economic and political instability. Choosing these metals today is less about speculation and more about preparation. What are your thoughts on the future of gold and silver? Let us know in the comments below. If this video was helpful, share it with friends, like it, and subscribe to our channel. Don't forget to hit the bell icon for updates. Thanks for watching.